Okay, this video is for lesson 2.2, and we're going to analyze how transactions affect accounts. Learning objectives for this is to restate and apply the 4 questions necessary to analyze transactions for starting a business into debit and credit parts. Now, every accounting system, every business will have a chart of accounts. Now remember, each transaction changes the balance of at least 2 accounts. That's why it's a double entry accounting system. Now the list of accounts used by a business is called a chart of accounts. Here's an example. This should also be on page 3 of your textbook. Here's your balance sheet accounts. We'll talk about that. And right now it's your assets, liabilities, owner's equity. You see each account is listed underneath its respective component. There are numbers, and we'll use those later on. Later on, we'll get into some income summary accounts, and that's your revenue and expenses. And again, expenses are all listed under the expense category. So, as you go through a transaction, you need to ask yourself 4 questions. The first one is, which accounts are affected? Now remember, there's always going to be at least 2. There could be more, but right now it's at least 2. So you got to decide what accounts are affected here, and we'll see as we go through. How is each account classified? And by classified, we mean, is it an asset, a liability, or an owner's equity account? Then 3, how is each classification changed? Are we increasing an asset? Are we decreasing a liability? So forth. And then finally, how is each amount entered in the accounts? So if I look at a transaction and I say I have to increase cash, I go to the T account, and because cash is on the left side of the accounting equation, I'm going to enter a debit for that amount into the T account. So let's take a look at a few of these and how they work together. So here we're going to receive cash from an owner as an investment. So on January 2nd, received cash from the owner as an investment, $2,000. So the first thing I have to ask myself, what 2 accounts are affected? Well, I see cash. Boom, that's my first account, is cash. Then I see from owner. So I know I'm getting money from the owner, so that is going to be the owner's capital account. Okay, so if you look here, we got cash and Michael Delgado capital. Okay, my next question is, what is cash? What is Michael Delgado capital? Well, cash is an asset. Capital is an owner's equity account. Okay, so there's my second question. I got an asset and I got an owner's equity account. 3. What happens to each classification? So asset, I received cash, the asset goes up. I received it from the owner, and remember I went across the equal sign, so I also have to increase whatever's over there. I already have a debit, I have to have a credit, so the owner's equity account is also increased. Okay, the next, how am I going to enter the transaction or the amount? So cash is increased, I go to the increase side and I write $2,000. I go to the credit side for my owner's equity account and I put $2,000 capital. Now with our next transaction here, we're going to repay cash for supplies. So January 2nd, paid cash for supplies, $165. So again, the first question I ask, what accounts are affected? Well, I paid cash. So cash is going to be affected. I bought supplies. Supplies are going to be affected. Okay, so cash and supplies are affected. Next question, how is each classified? Well, cash, I can own it. It's an asset. Supplies, I can own those. That's also an asset. So both supplies and cash are assets. Third one, how am I changing each classification? Well, if I look at this, supplies, I got supplies, so my supplies are going up. I paid cash, my cash assets are going down. Okay, so I'm increasing my supplies, decreasing my asset cash. So the fourth question is, how do I enter the amount? Well, I'm increasing supplies, so I'm going to debit that asset $165. I'm decreasing cash, so I credit cash $165. So I'm adding and subtracting. I've stayed on the same side of the equal sign, so I got to do opposites. Next one is we paid cash for insurance. So we paid cash for insurance, $900. Okay, again, the first question is, what accounts are affected? Well, I paid cash. Cash is in there, and I got insurance. Now, one thing you're going to find out with insurance, remember, we're paying ahead on insurance, so it's prepaid insurance, not just insurance. So I have cash and prepaid insurance. Next question, how is each one classified? I can own both of these, so both prepaid insurance and cash are assets. Question 3, how is each classification changed? Well, I have two assets, but I bought insurance, so that's going to increase the asset insurance. I paid cash, so that's going to decrease the asset cash. So the fourth question is, how is each recorded? Well, I bought insurance, that's going to go up $900, so I increase. So I go over here to the debit side and I write $900 debit underneath prepaid insurance. Now because cash goes down, I go to the decrease side and I write a $900 credit for cash. Okay. Now sometimes we're not going to have enough money and we need to buy something on account, or we're just going to use a credit card or whatever for right now. Okay, so we're going to buy supplies on account. January 5th, we bought supplies on account from Crayon Office Supplies, $220, excuse me. So again, I'm going to ask what two accounts are affected. Well, I bought supplies, so my supplies account is going to be affected. Now remember when we said on account, that's going to be a liability. We're going to agree to pay for it later. So we bought on account from Canyon Office Supplies. So our two accounts affected are supplies and accounts payable, Canyon Office Supplies. Next question, what is classification? So you see supplies is an asset. The accounts payable, Canyon Office Supplies, is a liability. We owe them money. Next question, how are we changing these? Well, I bought supplies, so my supplies are going to increase. My asset supplies increases. I now owe Canyon Canyon Office Supply more money, so that increases the amount that I owe them. So the liability are increased. Okay, so then the fourth question, how am I going to record this? Well, I recorded increase to debit for $220 on the debit side, and I recorded an increase to the accounts payable on the credit side, $220. Okay. All right, now, after a while, we got to pay that back. So we're going to pay cash on account. So January 9th, paid cash on account to Canyon Office Supply $100 of the $220 that we owe them. So what two accounts are affected? Well, I paid cash, so my cash is affected. And I paid on account, so remember, on account is an accounts payable, a liability, Canyon Office Supplies. So I got accounts payable, Canyon Office Supplies. There's my two accounts. Now, I got to find the classification. Cash is an asset. Accounts payable, Canyon Office Supply, is a liability. Okay, now I paid cash, so my assets are going to be decreased because I'm giving that asset to somebody else. Okay, liability, I now owe less money because I paid on account. So when I pay, liabilities are going to be decreased when I pay on account. So how am I going to record an increase, a decrease to cash? I go to the credit side, $100 decrease cash is credited. Liability, how do I record a decrease? Well, the decrease side is a debit. So accounts payable Canadian Office Supply is debited $100.